Greeting, campers. All right, so tonight we are going to have what is probably my favorite technical analysis lesson. I think this is really cool. I mean, of course, I'm a chart kind of geek, but most people don't understand technical analysis. Some people think it's like astrology, and some people think it's like reading tea leaves, and I can understand why, because a lot of analysts that do it don't seem to get the fundamentals. And what gets me kind of frustrated is when I see people talking about things like GAN theory and harmonic charts and Elliott wave. I mean, if you guys can make money off of that, that's fine. And start a newsletter, and I'll subscribe to you. But to me, it's just understanding psychology, right? For instance, let's look at the S&P 500. It ran into resistance here. Why? Because it was resistance there. This is because of buyer's remorse. People bought here, and when the price went lower, a lot of them said, I made a mistake. And if it gets back to my price, I'm going to sell my shares. So buyer's remorse can make what was resistance become support. So now let's take a stroll down memory lane here. And this is the Dow Jones. The Dow Jones first came out at 4094, I believe. All right, so let's go back here. Now, what did we just see? Resistance becoming resistance at a former resistance level. I'm going to make this just a little bit easier to read here. Because of buyer's remorse. Well, just like now, back in the 1800s and early 1900s, people experienced buyer's remorse. This price level here, which is, I guess we'll call 95 on the Dow Jones, which is now at 44,800, was resistance in February of 1906. Then it became resistance in November of 09, October of 12. This must have been the beginning of World War I here. All right, now let's see what else we could see. We could see a level where support became support. So big sell-off in January of 1908, sell-off again. I guess you could call this the World War I crash. Where do we find support? At the level that was support before. This is seller's remorse. People sell, and when the price goes up, they're like, oh, if I can buy my shares back at the same price I sold them at, I'm going to. So when the market eventually gets back to the price they sold at, the level that was support, they place buy orders, and it becomes support again. This, to me, as like an historian, an amateur historian, which basically means I like to hang out and read books. Look at this. Dow Jones, 1903. I don't know what was going on then. Finds a bottom around 43. And then we have the roaring 20s, the market crash. And where does it find support? The level that had been support before. This isn't a coincidence. And I know you're like, wow, how could a market have a memory after 30 years? But, to this day, I've been doing this a long time. And to this day, it still amazes me. So now let's go back to our current day. And I don't know, let's just take a look at, I guess, NVIDIA, right? The stock of the day, which it tends to be. Although there's some other cool things going on here, right? We can see here the level that was support became support. We just talked about that. We could also see the level that was resistance, became resistance again. Because it's the same emotions. Just like back then, 120, 30 years ago, people had seller's remorse, people had buyer's remorse. Now look at that. Wow, this is going to be an interesting thing for the whole market tomorrow. One of the things that we haven't looked at is how buyer's remorse could cause support to become resistance. So people buy at these levels, and when the price goes lower, a lot of them are like, oh, I made a mistake. If I can get out of break even, I'm going to. So you could have remorseful buyers from here and here placing sell orders here, and that could put a top on it. But let's go back to the Dow Jones. Look at this, right? And you don't need to be a chart guru to see this stuff. It's clear. March of 1938, which this is probably when people were starting to realize that the Great Deal didn't work and the country was going back into recession. And it's actually what saved the country from the Great Depression was World War II, frankly, because all these unemployed people got jobs as soldiers or working in factories. But anyway, so March of 1938, the Dow Jones is around, say, 97. June of 1944, May of 1942, same level. Now, this is probably when it was clear that World War II was over because I think the Russians beat the Germans at Stalingrad, and that was the real turning point of the war. You can see here, support becomes support becomes support. All right, pretty cool stuff, everybody, at least to me. Support. Oh, this is interesting before I get going. Check this out. Now, for like people that talk about valuations and price to earnings ratios, if that's your thing, that's your thing. But in my opinion, markets are driven by psychology. So here's the Dow Jones, and this black line here is 1,000. There's no logical reason why this market should turn around at 1,000 at such even numbers, or maybe it's like the greatest coincidence in history. But it shows psychology. There were people that are like, oh, if the Dow gets up to 1,000, I'm going to sell my stocks. And back then, they didn't have ETFs. So this is just people selling baskets of stocks or the aggregate of what everyone is selling. So resistance here became resistance here, just like we saw before, right? Resistance here, resistance here. If people talk about buy and hold, and that's great because we've been in a long-term bull market, but look at this. Had you bought the Dow Jones in February of 66, you wouldn't have made money until November of 82. So just a great example of psychology. Remember, psychology drives the markets. All right, what else can we look at, everyone? I don't know. I usually ramble for a little bit longer. There's some more. There's some more we can see back here. Yeah, let's just look at our current markets. So that's going to be important to watch. Nvidia, obviously, as it always is. Well, not always, but the fact that you have like one of the biggest stocks in the market getting to a level that could be resistance, it's important to pay attention. Now look at this move in Apple. Wow. But that's got to be getting pretty overbought there. All right, so let's make our checklist. Nvidia testing possible support level. Resistance level. Apple testing possible resistance level and overbought. And then, of course, look at Microsoft. Ooh, look at that. Wow. That's some really powerful action there. I think that a lot of the money that came out of NVIDIA went into over here. Thinking just like we talked about, right? We get up to a resistance level that was resistance before, there could be resistance again. All right. Thanks, everyone. Thank you for hanging out, and I'll talk to y'all soon.